The people of America spoke yesterday, giving the Democrats prominence in the House of Representatives and the Republicans prominence in the Senate. So what are the implications for U.S. domestic and foreign policy, and how is this fed into the U.S. dollar, which is an important trigger for global markets? Well, to give us his take on what's gone down and the various implications, I'm joined on the line by Jameel Ahmad. He's Global Head of Currency Strategy and Market Research at FXTM. Thanks very much for joining us, as always, Jameel. So the Democrats have taken the House of Representatives and the Republicans maintain a stronghold on the Senate. So was there any market reaction either way to the outcome of the midterm elections?
Thank you very much for having FXTM as always. So basically the markets have taken this news pretty well, because for once, when you consider all of the shocks with elections in the past couple of years, specifically around the UK, Europe and the United States, financial markets and investors were well positioned for this eventual outcome. So this is why we're seeing some improved risk appetite so far today, especially as the trading days progress. We've seen this in Europe, seen a positive day in the United States just kicking off. We've seen a lot more improved risk appetite towards the point of a lot of different emerging market currencies edging higher against the US dollar, which includes the South African rand, the proxy for evaluating investor appetite towards risk. It is up by over 1% today, basically because the markets have taken this news pretty well, that there's not going to be some sign of instability when it comes to politics in the United States, and that those really unlikely risks of, the Liberal Democrats taking over even further control, getting enough influence over to potentially impeach Donald Trump, and all these other, unlikely risks have been hidden away, at least for now.
So what does this outcome mean for Trump's America First policy, and might he have to tone down the rhetoric and action in relation to trade issues with China, as the Democrats are more inclined to work with their global partners rather than antagonize them? And depending on your response, what does this mean for equities and currencies?
Yeah, the narrative for China is going to be a very interesting one to monitor, specifically moving forward, because you are right, the Liberal Democrats have this global view, they're very pro-globalization, and probably going to provide resistance to President Trump when it comes to pushing the America protectionism era, which is something that we've seen a lot over the past 18 months or so. This is definitely something we're going to have to monitor. Interestingly enough, it's the initial response is that the Liberal Democrats have not taken over enough control. For example, the Republicans are still in control of the Senate to really push the brakes on President Trump and China. So they're not seeing that much more of a response positive in the Chinese yuan. However, the Democrats having this control they have now, which is improved from yesterday, it might provide some obstacles towards President Trump pursuing further fiscal stimulus in the U.S., and to provide an even further pro-America policies, which is probably why investors are gradually unwinding further from USD dollar positions, which could be good for markets, but it's definitely going to make things interesting to monitor from afar.
So meanwhile, Chinese authorities, both monetary and fiscal, are trying to pull all the levers available to them to stimulate continued growth in the Chinese economy. Can they succeed even if import tariffs are ramped up in terms of percentage and volume as threatened by President Trump for early next year? And of course, if your response is a negative one, what will that mean for their demand for commodities?
They can succeed. However, what they would need to accept over the near term is the likelihood that everybody knows that China will be more impacted by this trade war than the United States. It's natural because the U.S. imports a hell of a lot more from China than China does in the other direction. So China is the one that's going to be impacted by this the most, and that has been shown in economic data over the past couple of months. Now, what China can do is accept that, the new normal could be even more down to its economic growth, which is probably what's going to happen. We're seeing slower growth from China, but to think of ways to really try to reinvigorate the economy, whether that's through domestic spending or domestic growth. And over the longer term, the expectations is that President Trump will sit down with the leaders of China later this month at the G20 meeting, in Argentina, and that hopefully there will be a breakthrough. Because even the inner suspicion is that President Trump does not want a trade war either, but it's just that he's got this very hardline trade narrative, which obviously he's used a lot to rally his supporters, and that any deal he gets from this point when it comes to improved trade barriers or any kind of improved trade deal with China is going to make him look like a hero to his voter base, which is obviously what he wants, and why financial markets seem to be a little bit more relaxed now about these trade tensions than what they were when we last spoke a couple of weeks ago.
Yeah. So with Mr. Trump's anti-immigration stance, how has the election outcome impacted the likes of the Mexican peso? Can South Americans with intentions to head to the U.S. feel a bit more confident that they won't be met by the military at the Mexico-U.S. border?
Actually, we need to see what happens when the United States wakes up later today, because the U.S. markets have only opened recently, and it's expected that President Trump is going to make an address later today. I think it's 11:30 Washington time. So maybe they will touch on those issues. But at time as speaking right now, the Mexican peso is actually one of the few currencies that has weakened against the U.S. dollar today. So that suggests that this change in power, this change in play with the U.S. midterm outcomes, it might not have that much of an impact on the very Mexican agenda that President Trump has carried, and perhaps this is where the Mexican peso has not reaped the benefits of the likes of the South African rand when it comes to seeing widespread dollar weakness, because we have seen widespread dollar weakness today, and the Mexican peso is one of the few isolated examples that has not benefited. And interestingly enough, it's the Chinese yuan which is the other.
So you suggest that had the Democrats also taken the Senate, it could have been quite negative for markets, as possible impeachment proceedings could be brought against President Trump. So are you saying, based on the current outcome, you don't foresee any possibility that during the balance of his term he will face impeachment proceedings?
Well, there's still 2 years left, and anything can happen in 2 years, as we've seen with this very unpredictable administration. But we can say that over the near term, these risks have gradually reduced, and it probably was seen as the worst outcome to this election in terms of financial markets. If the Democrats would have got control over the Senate as well, then yes, the markets probably would have been at risk of tanking. We would have seen a lot more volatility because of these threats that we could have a possible impeachment, or there could have been all sorts of roadblocks and hurdles when it comes to legislative reforms, which is what investors do not want to see. So we can take the brighter perspective that the financial market volatility over the past 24 hours or so has actually been very contained. It's been a lot more moderate than what I had prepared myself for personally, because I've been in the office at the US elections and I dealt with the UK Brexit as well. So things are a lot more positive that this outcome is it's sustainable for the medium and longer term, and it avoids some nervous risks for financial markets over the near term. I think that's the correct way to put it.
So while we speculate on what this election result will mean for US policy, domestic and foreign, of course, that economy's dynamics remain quite strong with low unemployment levels, higher wages. So obviously the independent Fed is likely to continue doing its thing of raising interest rates. So in the interim, can we expect more adverse impacts for emerging markets like South Africa?
Well, U.S. interest rate policy is something that I still think has been mostly priced into the U.S. dollar. We have the Federal Reserve decision outcome, which is tomorrow on Thursday. So what we'll look for is the policy statement and whether the Federal Reserve indicate any adjustments to interest rate policy over the next 15 months. Otherwise, we very much expect for another 4 interest rate increases from now until the end of 2019, which has been mostly priced in as we talk now. What we do need to see looking forward is whether the ideas or the thing that President Trump could be about to unleash further tax cuts or further fiscal stimulus or further stimulus to provide another uplift for the U.S. economy, whether that hits an obstacle now in terms of legislative reforms, because the Liberal Democrats do have some more influence now than they did 24 hours ago. So I'd say that's more of a driver for the U.S. dollar. It's probably why the U.S. dollar has gone lower today, and it's probably a reason why the EM currencies in general have rallied against the US dollar, and that's what I would look out for more now than US interest rate policy outcomes.
All right, Jameel, always good to have you on. That was Jameel Ahmad. He's the Global Head of Currency Strategy and Market Research at FXTM.